Welcome back to the Great Report, Matt. How you doing?
Whew, it is. It's been another exciting week. Things keep changing, changing different ways. But man, when things are so uncertain, it just seems like every week is a new week.
Yeah, it's what keeps us young or ages us very dramatically.
Yeah.
One way or the other. But it is interesting nonetheless. Matt, I'm really excited to be back in the seat. I had to miss the last several Great Report recordings due to illness, some spring break. Here, there, I'm back in the saddle.
Good to have you back.
Addison did a great job. Jay did a good episode a couple weeks ago. So appreciate you guys keeping things moving, the ship afloat.
It's easier to be on this side. I can get kicked back and let you host.
You think it's easier being here or there?
No. I almost got used to it, but I think it's a little easier just to be on this side is a little easier.
Do you like the glory?
Yeah, that's what I liked. No, I appreciate the support role. It's way easier.
No, you're doing most of the heavy lifting. All right, Matt. Headline that came across the desk this week. It's not shocking. The West Coast will be the West Coast, but Washington State just passed universal statewide rent control.
Yeah.
And the first thing that came to my mind is, Washington, have fun having your rents go up.
Yeah.
Because in all of the markets where rent control has been imposed, the rents have gone up. And they're some of the most cost burden, from a housing perspective, places in the country. Now, you could say that's why they have rent control. But most of the cases, rent control hasn't improved it. And you just said right before we press play, is that, and it's really true, people want to be able to have some sort of sense of control. They see their lives out of control, especially if you're in a position of where you're struggling to make rent payments. Your life might seem out of control. And if you can have some sort of predictability, or at least the idea that you may see some predictability, that seems like a worthwhile endeavor. But, good intentions lead to unintended consequences. And that's what we've seen in every single example of rent control as it's been rolled out.
So why do they go up? We're controlling the rent, so they don't go down. Why does rent control go up?
It comes back to supply.
Yeah.
And demand. So if you are a developer and you're looking at building some new multifamily properties, and you can invest in two markets. Let's look at State A versus State B. State A has no rent control. It just relies on the market to determine the rents. You build it. If there's enough demand, you lease it up at the rents that you're advertising. If you overshoot those rents, no one's going to lease up, and so you're going to have to lower your rents to be able to meet where the market is. In those environments, and if it's easy to build, a lot of developers build. There's a lot of supply, and so rents actually stay low. That's why Austin, Texas, for example, has had negative rent growth over the last couple of years.
Okay.
In markets where your developers are disincentivized because they're going to be somewhat limited on increasing rents, although the details of this legislation exclude new developments for, I think, 10 years.
Yeah, like 12, yeah.
Regardless, it's the idea that how many buyers are going to be excited about investing in a state that limits your ability to increase rent. Now, so the details of this bill, are nuanced, and I think proponents of it can say it's reasonable enough.
Yeah.
It's relatively broad. For example, it limits rent growth to, I think, 7% rent increases plus inflation. So they're basically saying that that's going to be around, in today's market, around a 10% rent increase, and say, well, that 10% is a big rent increase.
Yeah.
Additionally, again, it excludes new developments. New developments can increase the rents for the first 12 years, and it doesn't apply to new leases. So this is really only applying for renewals. All of that sounds reasonable enough, except when you get into the particulars and the specifics of where you could have a renewal that someone's been paying, let's call it $500 a month, because there are still apartments like that here in Indiana that you're paying maybe $500 a month. They're not great apartments.
Yeah.
But let's say market rent's $1,500. At some point, if someone, I guess the question is, does someone have a right to stay in that apartment indefinitely, and they can only have their rent increased, call it, by 7% a year?
That's the first thing that I thought was, from a renter's perspective, if you've got a nice place, you might as well grab them while they're hot.
Yeah.
Because it's really going to incentivize people that are maybe living in buildings that are new now, or just create this kind of entrenched population that's not going to move as easily as they were before, because if they're in a nice place that's actually where the cost of living is increasing, but they're remaining static, and maybe there's more amenities that are growing up around them, and they are able to maintain that same rate growth, and that's pretty great. I thought that in general, now the other point that was made by Jay Parsons in a separate post about this was that that's and they do allude to it at the very end of this New York Times article, is that 7% figure is negotiable, right? If it's arbitrary to begin with, maybe if rents do increase up to the 7, every year because no one's building new apartments, then maybe they decide, well, okay, let's get this down to 4% or 5% or whatever. I don't know how that would shake out, and I do think the 12 years is a lengthy amount of time. That would mean, I think that would incentivize development, maybe not, but it would put a clear timetable on when the investors have got to look for the exits.
Well, that's the challenge. So it may not be on the developer itself that's going to miss out on potential rent increases, but they're eventually going to sell that at some point. A lot of developers might build it, own it for 10 years, decide to sell. That next buyer is going to be limited to how they can.
Yeah, and so when you're selling that after 10 years, you're selling it on like, this is as much rent growth as you can get, or you're selling. And I don't even think that. So this is important to note. Rent growth was 9% in Q1 2022. That was year-over-year rent growth was that. Year-over-year rent growth in Q3 2007 was 7.1. And then year-over-year rent growth from like 2015 to 2016 was about 6%. So it's not unprecedented, but it is possible in Seattle. I remember the whole story of the pandemic. Seattle had very, very, very low rent growth because it was just one of those places that had probably built a lot.
And people were getting out of cities.
Yeah, that's true. Yeah. Especially the tech. There was a remote working thing.
Yep.
So there is variability, but to remove the chance to maybe make up for that, right, it is one thing in your Excel spreadsheet that's like maybe it's 1 or 2% risk that you'd rather have it than you wouldn't. So I don't like the idea of people just completely ignoring a market that may be pretty good. Like if I'm the only one that building there, but the math is not in its favor at least.
Yeah, the math is we're basically saying like, okay, what is the true problem that we're solving for? It's for relatively extreme events.
Yeah,
but so the proponents could say, but it's all pretty reasonable, and I don't necessarily disagree. Like the details of like, usually you're not going to be raising rents on renewals more than 10% every year. Like, okay, that's fine. So does it completely kill the market? Maybe not. It certainly doesn't help it. It doesn't help. It doesn't increase the amount of housing supply. But worse than that, it creates a paradigm in a system that allows for price controls and for rent control.
Yep.
Because there's, like you said, now that this infrastructure and this precedent is in place, there's no reason why those rent increases might not be able to be decreased in future years. That it gets amended down over time to 5% or 3% or 2%, and all of these metrics are being made relatively arbitrarily, by politicians, by tenant rights advocates who, again, all good intentions, I'm sure. But they don't necessarily. They're not thinking about the downstream economic consequences and incentives that actually lower housing costs.
Yeah.
Empirically, we've seen it over the last couple of years in the Sun Belt, in Austin, compared to markets that have rent control. And so it's a little offensive to everyone who believes in science, believes in logic, and looking at empirical data in case studies to show that rent control specifically over time, since it's been tried over the last 70 years, has failed in almost all examples. And so we're trying basically the same type of thing again because it makes us feel good. And what you said earlier is that it gives us an illusion, an absolute illusion of being able to just control
the impulses to control.
Yeah, exactly, 100%.
But I'm also thinking that like it may not kill the housing market. It's just going to make it a whole lot different. And
like California, the housing market isn't destroyed. It's not good.
It's just exactly. It's just way different. It's subject to way different like dynamics that make it a little harder to to build and a little less reactive to housing demand in general. And I'm thinking of New York right now. Like New York's rent growth has been relatively decent recently, but
True.
again, it has a stigma among, and it's its own special market. And the same thing kind of with like San Francisco. It's its own special market, and like Los Angeles a little bit too. The question is Seattle going to be? Does Seattle have that enough of that kind of specialness, or is it going to be seen as an alternative that builders would rather not build in? I'd be really curious. I think that there is it's interesting. The story of this law is that in 1980 they put the previous law that was on the books was a Republican-controlled state legislature, and they said no bans or no rent controls.
The last time they actually imposed.
Statewide
rent legislation often is to limit local municipalities from imposing rent control.
Yeah, exactly.
Yeah,
and so this is way different. It could mean that people with a specific business plan are able to get in there for, let's say they get in there for like the first 5 years, and then they sell it for the next guy that's in it for the next 7, and then I don't know what, but that sales price at that 7 year may be lower, which means that the sales price that he's willing to buy it may be lower, which means that the development cost may be a little bit lower. So it cascades down. At the end of 7 years, if you know that at the end of 7 years, whatever apartment building is going to be a little less attractive than other apartment buildings that were built without rent control, then you're probably going to factor that in at the very beginning, rather than saying, you can't assume that the guy that buys it from you is not going to know that too.
Yeah.
Very interesting. It will be really super interesting to see what develops in there, because people were building like crazy in Seattle. I was there a couple of years ago, and there were still cranes going up. We'll see if that momentum continues. It's a super interesting, especially in the wake of what did they say? Oregon and California had both put in rent controls, and this is the very last paragraph of the thing. It says at the tail end, it says the cap at 7% plus inflation rate is in place in Oregon, and it's 5% plus inflation in California. Both states set a maximum of 10, but there are efforts in both states to lower those caps.
There we go. Yeah. There we go. It's sad because California, Oregon, and Washington, all just absolutely beautiful states. All states that I would love to live in, but between rent control and gun control, that's just not an option.
Yeah.
So it's too bad.